Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Jack, what about gold? We can't stop without talking about gold, so would like to your view on gold.
I think gold's in trouble here. Precisely because of what's happening because of interest rates. If we see the interest rates move up and compete against gold, I think gold could be in trouble. And if the interest rates give the dollar yield support and the dollar moves up, so all of a sudden people may start to realize that, hey, maybe the dollar isn't going to zero, and maybe there is going to be some competition on the interest rate side. I think gold could be in trouble. That's our general view. However, we never estimate the ability of the existing political structure in the U.S. to screw up a good thing. So if they continue to debase the currency in a huge way as the only means of what they see as growth, and we continue to see the risk exploding out there as it is, because of global rebalancing and none of this stuff taking place, there's no reason gold doesn't go higher. But if we're right on the dollar, we think gold could come off.
Very interesting. Jack, I have a comment from John. I just want to read it. As a subscriber to Currency Investor, I want to recommend it highly to everyone in the room, no matter what they trade. I'm an intraday trader, so I don't have the time to focus to do any involved macro research. Currency are excellent resources for traders. So there's one for you, Jack, and I've heard that before.
Nice, thank you.
So, Jack, one other. So you think that we might actually move away from, I know you always talk about the smile. I find that concept so interesting, the dollar smile, and we might actually move to potentially the dollar could rally based on growth and not because of the world crumbling apart?
Yeah, I think it's possible, and it would be surprising. And if you follow markets, that surprise is what moves prices pretty quickly. If the dollar were to move on a relative growth standpoint compared to its competitors, it's the type of move that it needs to sustain a longer-term growth pattern, as we're assuming. It can't just be these risk bids falling back and a risk bid falling back. There has to be some real reason for not only short-term capital to come into the U.S. dollar, which it would do as interest rates rise relative, as we showed you on the chart, relative to its major competitors. That hot money would come into U.S. deposits. But there has to be a real reason, and that has to be based on some foreign direct investment coming into the U.S. Whether at some point we pull the trigger and we say to the U.S. companies that have trillions of dollars offshore that don't want to bring it home because they're going to be taxed to death, we say, hey, bring it home and make real investments, and you don't have to. Those types of things are real direct investment coming back into the U.S. that would be, extremely beneficial to the dollar. That would drive it from a wealth building standpoint, which it really needs to sustain it. And that is actually part of our view, as outlandish as that seems.
And Jack, question. This is a question from me. The Australian dollar seems to be moving up well for a number of months, but the Swiss franc's been moving up also. Is that sort of that same dollar smile in the reverse, that you have two currencies that react differently, but they're both moving up based on different environments?
Well, the Swiss isn't really moving on yield, which Australia has.
Right.
Swiss is getting, I think, a couple of dynamics. One, on a relative growth standpoint, Switzerland's doing pretty darn well. Mm-hmm. But number two, they're not part of the monetary union. So they tend to get the safe haven flow of people that want to get out of the euro that don't necessarily want to go into the dollar. So they're getting some safe haven flow, plus doing pretty well on their own from an economy standpoint. So that's the beneficial driver there. where Australia not only gets the growth, but it also gets that hot money flow because the relative yields are so high. So the dynamics are somewhat similar, but you don't have the interest rate, and you do have the safe haven aspect of Switzerland.
Makes sense. What about oil? What do you think, Jack?
I just don't know. You know, I don't know too much about the oil markets. David Newman, who is our marketing director, knows a heck of a lot about the oil market. He was a geologist and drilled a whole bunch of wells in the days out in the Gulf many, many years ago. Was a real roughneck out there, you know, telling them where to drill. He knows a lot about oil, and he never bought into the peak oil argument. He counseled us on that often when we would write about it, but he's not here, so I can't put him on.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.